Here we go. Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. Woohoo! Party! Do 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 do. Boom! It sounds like a stock market just a few days ago. Let's just make sure YouTube's working. I'm running this on my own today, I think. Oh, now YouTube is giving me the circle box. So I don't know whether now YouTube. Hey, yay, it's working. All right. So we had a really fun daily brief today. Of course, heading off talking about stock markets, putting in bottoms. And you can see stock markets are rallying egregiously here. 7% rally in the stock market today. Hey, Canadian banks up 12% on the day. Oh, yeah, up and down like a horse drawers. Actually, I've started to build my shopping list of names that I can now officially start thinking about working bids on for RRSP plans and stuff like that. Some growth names. Actually, one name that I did actually pull the trigger on recently there, this Silvergate. And actually two. I'm actually going to start seriously watching Hut for signs to add positions, but as you can see, he's not even enjoying any rally today. It's all about the big caps today. So at least we now have some floors to work with in the market. That's encouraging. I guess probably the best thing for you guys, we'll just sort of stick to our regular conversations. I mean, we have lots of fun running our little day trading models and algorithms that are hunting longs and shorts. I mean, it's a very chaotic market right now. You better have identified your trading plan and be damn crisp with that plan. But let's go through just the regular spiel. Not a heck of a lot of change to this chart deck for today. Basically, a conversation is the same. But like I said, great to see that we've been humming and hawing just of late. U.S. dollar index, classic freak out proxy in the market. If all hell's breaking loose and hell in a handbasket, ultimately. If everything falls apart, everybody just runs into the U.S. dollar and turtles. It's interesting that we've been watching this channel, or this expanding wedge channel here for a while, and we did have that failure come in right at the top of this this megaphone, if you will. And interesting too, we had a little dip outside of the megaphone, little dip outside the megaphone, and then back into the range. I had been putting tweets out to the effect that because this high was 102.99, this high 102.98, this could potentially form an inside bar fractal failure a couple days ago, and that was basically on the idea that the U.S. Federal Reserve has taken their interest rates to zero. They came out and said on Monday, you borrow as much money as you want, you can have all the money you ever want. We've turned the printing presses on. If you need money, we're here for you. They, to a certain degree, needed the U.S. government itself to basically give itself permission to run more debt. This latest stimulus package, they're calling it, is that permission. So now the U.S. Congress has basically said, here's a whole bunch of money. Well, obviously, we're on the hook for it. More debt kind of idea. And now the Federal Reserve can do their reserve lending ratios and dramatically expand the money supply if people want it, based on that sort of reserve requirement lending world that we live in. So the world is awash in U.S. dollars, so people are thinking, okay, well now, I don't have to worry about liquidity so much, and the Americans are diluting their currency. They're taking on more debt. Maybe we can actually start thinking about putting money to work elsewhere. And we're starting to see bids come back into things like commodity currencies and commodity markets in earnest. So long and short of it here is if we do reverse back up through these highs and break out to new highs, then that means crisis is back on. But I get the impression that they've broken the bull here. Through the daily brief, of course, we went and looked at the options market. The options boys are going to have a field day here. They win, believe it or not. I know it sounds crazy, but they win an absolute monster home run if they can keep the volatility index above 32. So what do you think? Have they got a monster home run here? The answer is pretty obvious. If we look at things like the S&P 500, their individual strikes, huge vested interest for them to keep the market above this 230, 240, even 250 level into expiry. Are they going to do it? You tell me. We've played this game long enough. On the S&Ps and stuff. And this is sort of, what this initial bounce will do is it will start now firing all these bullish divergences. Kind of like what I've been talking to you about, what I want to see out of Bitcoin is I want to see some sort of sign of bullish divergence, i.e. this price is a lot stronger than what price is leading you to believe. So that is what's going on now. And, through the daily brief, we ran through a bunch of markets and said, what's our sort of rule for determining whether this is still a bull or still a bear, or whether we've turned back into range? We need to see 38.2 resolved. And you can see there's a big old hole on the charts right up to that level. So my hunch is the options boys, they win a massive home run. If they can keep these markets well bid into Friday. And I like the idea that this dead cat bounce plays itself out into the weekend. Why is the market bouncing? As I said just a moment ago, it looks like the politicians are basically going to throw silly money at the market. Japanification, rinse and repeat. We do it all over again. The only problem here is that we've got an issue that's going on that's completely beyond the 1%'s control. Of course, tinfoil hat. Some people believe that this was caused by the 1%, but we don't need to go there. The point of the matter here is I do expect the market to come back down and test these lows. Gaps like to be filled in. And this was a V bottom, so we know that V bottoms like to be tested. And it's on that test, think Adam and Eve kind of bottoms. If this is our Adam, then ultimately down the road we'd like to see a nice Eve. And that's the sort of environment that I want to see for me to say, yep, the bottom is in. So actually interesting, Bitcoin went through its dead cat bounce here recently, and basically it's the exact same conversation. Now we're starting to see it in the stock market. Yep, you can see, as long as this fractal keeps working, then it sort of means to me the crisis is on pause. Notice they've left a gap here. We've got this wick up top. We will be back up here at some point, but just not for now. And then also, too, like the conversation about the derivatives boys, it's actually quite understandable what they're doing here. So with that sort of context, risk on, risk off, what a surprise. Na levels. Talked to you guys in the YouTube pages about this before. We're actually getting a fractally type price action here. I do believe we found some sort of floor. Interesting to see the crude oil still is just floundering along the bottom here. Notice it's trying to fractal out here, but the problem is I don't really like crude and I don't like energy. I do understand that there probably are some traders that are going to trade this bounce. My hunch is that there will be something, but I don't want to invest in energy anymore. Bond market, obviously humming and hawing there a couple days ago about massive supply of this stimulus coming in. Then, coming out of the weekend, maybe that vote is floundering. I've got the impression now that that basically that package is solidified now. It's just a question of everybody rubber stamping it. How long does that take to actually come to market? I don't know. But I'll tell you, the fact that massive stimulus is coming out, I even heard talk of them floating like 100-year bond now. Oh, goodness. So I mean, it's tough for me to get bullish of bonds, and of course, you know me, cycle wise, I thought the top or the bottom in rates and the top in prices was last peak. Obviously, that was proven wrong. Is this sort of the hallmark of what that top looks like? Way too early to tell. We're going to have to see some M's here to say, yep, that's it for the bonds rally. And the stock markets come roaring back here. I was really interested to watch this gold action overnight here. I mean, if this is really a bull and everything's rah bull, why didn't they just go blast out through the highs and head higher? And, you know, we watch the markets very closely. I was very interested in this silver trade. I even put tweets out to the effect that, wow, look at that triangle breakout. It looks like, and I was thinking that, okay, well, they were going to move it up through the European session, but it almost looks to me like they were waiting for the North American session to start again to get this rally going again. Still think silver could work its way up to 15 and a quarter here, no problem. I was fascinated, and I don't know, and we talked about this on the daily brief here to a bit here today. I was fascinated to see all these prints here volume-wise on the gold. There's some serious business being done here. I don't know whether this is usable information. This is a chart generated from TradingView. But wow, what an interesting volume spike there. And of course, you know, please understand the gold trade I think is kind of done. And that's this chart here. I thought it was fascinating, man. Just banging right into these crazy chaos levels again. Bobo and Raf. There's your 877, and this was that 469 off of the 4.669 off of this original low. I don't know whether these are even accurate, whether they're usable, a student of the market. I just found that fascinating how we just banged into there and were rejected hard. So, interesting, you know, considering the way gold was just so insanely face-ripping there just to stop on a dime here. And like I said, massive amount of volume. Is this sort of central bankers? You know, there's one gentleman that we used to work with that's convinced that the paper gold market is 100% fraud, and it's all completely controlled by the 1% that want to keep gold prices down. Are they coming in here and then are they suppressing price here? I don't know, but I'll tell you, somebody's doing some serious business here. And interestingly enough, silver is still trying to just continue working its way higher here. That's fascinating. What else should we talk about with you guys in the public today? So, you know, I mean, there certainly aren't any trades here for me, but I did put out tweets sort of to the effect that, you know, ironically enough, I actually think silver's, if gold can jump back up here, why can't silver jump back up too? I don't know. We'll see what happens. Silver's considered industrial metal. Maybe if industrial is figured like it's coming back here in earnest, maybe that's what gives silver a pop. I don't know. Tough to say. I've been talking to you guys. Like I said, I showed you just very briefly my little shopping list of names I would really like to buy through this meltdown. More sort of, I want to invest this money in registered accounts, not little sort of dinky little penny stocks. These are more sort of quote-unquote blue chip. Silvergate, this is a stock that's in the blockchain space. It's a bank. Boring. Oh, he didn't say the B word, did he? But they actually cater to the crypto community, which I love. I think that's awesome. And trading below cash on the books. I always love if I can get a situation like that. So I did go and buy a little bit of this the other day. I think I might even add some more if this thing W's out. And then a natural gas company in Canada that's a utility. You can see the double bottom. There was a nice little inside bar signal this morning, but I really wanted to see the double bottom come in. And this one here, this is a great example because my hunch is this gap right here will be the reload zone down the road. So, you know, if this W does confirm here today, I'm going to get a bid working to pick up some of that stock. If we head over to crypto, haven't seen the signs that the crypto stocks themselves have bottomed yet. Like I showed you that shopping list, that little hut isn't quite ready to put in some sort of firm floor yet. And I still think in my conversation with site people, and it's the same conversation that I had with you guys the other, basically on a daily basis. I still feel as though that this was very V-bottomy. It's actually very much like what we're seeing out of the stock market right now. I think I had sort of said that I was actually very pleased that, sort of where did the money first go when the market sort of sniffed a bottom? It went into crypto. Unfortunately, though, this kind of price pattern, it doesn't sort of, it doesn't set up for sort of a nice conservative, high confidence trade entry because, if you've been following me long enough, you know about reload zones and all that kind of talk. So if I was going to be a buyer, really, I like the idea of like 4,500 up to 5,100. On almost all of my charts that I put out, I think I show you guys these charts on the weekend. Boom, 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 boom. If I wanted to be a buyer, this is really where I'm interested. I can actually see a case, and an old TRI OG'er, and I've been sort of talking on the net about this. Where's the best place to show you this, I wonder? I can see clearly now. No, wait a minute, that's something else. I guess we can just use this. I can see, he's going off something like that. A megaphone that goes something along those lines. It's in the, the Twitter feed. Something along those lines. I don't know whether we use this exact point here or not. But believe it or not, I can see this expanding wedge working. Which means technically we could very easily just V-bottom and just crank our way right back up top. That's very realistic. How ironic I threw that nutso insano chaos level out there, and some guy, of course, is just fucking shit all over me for posting this. But there it is. It is what it is. Believe it or not, I could actually see a scenario like this play out. It wouldn't shock me if I saw just chunk, 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 chunk. The only problem with chunk, 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 chunk is we probably got to come back down after this sort of pre-halvening event rally, which usually happens. And usually, halvening events over here. And usually the market peaks about a month ahead of that event and then troughs into the event. So maybe that's what our future looks like here in the short term. I can tell you from an investment perspective, a guy like me, this is too sloppy. Trade? Sure. If you're hunting those trade setups, off the 4 hours, we talked about this the other day. I think that the trade came in just right across the board, we're trading this crazy European market. Well, that was this setup right here. The trade, I think, if you were trying to sneak in on the long side, whether it be stocks or whether it be Bitcoin, the trade was that Fed event. This cute little W. This is a good example of sort of front-running the bot. Bot levels at the moment, you can see this wide double bottom. It's about 62.89-ish, somewhere in that neighborhood. That went up and hit the move stop to scratch level. So at worst, if we come back down to 62.89.5, botters just have to walk away. And this is a pretty interesting point here for Bitcoin. Now we're talking lower time frame, shorter. So remember, I want to see a test of these lows here. That's what I'd like to see to actually set up an interesting trade setup for me. So I've been sort of thinking, okay, well, how does this top end look? And usually these tops have to have some sort of divergence to sort of set the top up. And lo and behold, price went to new highs, and notice MACD histogram did not. Also, and I thought this was a really good analogy, we had the first M in RSI come in through here, basically telling the bulls, hey, cool your jets. Remember our first M conversation? That was usually the blue one. And then the second M actually sets up a sell signal, but the second M did not go through the 50 line. So it's not going to be one of these rip-roaring, insano, nutso dumps. This is sort of like, well, it's a sell, but you can see price is just sort of stalling here. MACD div has not confirmed yet. That would mean we go down through these lows. So that would basically imply a loss of this uptrend line. And lo and behold, just like our Fed bazooka event recaptured that trend line, you can see we're actually carving out a diamond pattern up top here. And if we lose the diamond, that will mean we probably lose this trend line and we lose this big trend line off of the original top. So this big trend line goes, I think it goes right from the start all the way down here. I'm not quite sure what I drew that off of. I guess that's this original M top right there. Isn't that interesting? It definitely has gotten a lot of respect here. So I think that there's valid information here. But I guess the way that I would look at this is very, very dangerous to be a buyer right here. I can understand people that were trading this, riding that rally, and that's sort of the same thing as like these kind of trades, right? You're trading your setups, you're in your setup, no opinion, setup came in, got to take the trade, right? That kind of thinking. But for moms and pops and sort of slow and steady wins the race kind of people. Oh boy, this looks dangerous. That's the way that I would describe it. Dangerous. And if anything, thinking things like megaphones. This actually, to me, actually speaks exactly of the market state of things like the U.S. dollar index. This is very chaotic price action, up and down like a horse drawers. And really the irony of it all is for moms and pops, really the message said before, same message, is you just got to let everything calm down. And remember, folks, I'll leave the video off on this. I'm not actually looking for the pivot until this first weekend of April. So I don't know whether we can really believe that we're done. And from what I understand, New York City is just going absolutely haywire with this stuff. I think we had the bump sort of, this was bailing Wall Street out, making sure companies like Boeing don't go bankrupt. I don't know whether, actually a really good way to describe this, and this is what I've basically been telling everybody on the site. Somebody put out a comment, a news, something along these lines. And this is the way that I'm looking at the market right now. Is markets are continuing to bounce up on the latest policy announcements and then sliding back down as the economic reality of this situation emerges. And that's sort of the way that I'm seeing the market right now. Let's hope now on the next retest of all these lows that we're seeing being put in, we can hold the lows, start Wing, and then we can start the game all over again. All right, well, there's basically your market summary. I sure hope you enjoyed that. I thought and I even told the site people this same sort of thing. I thought this shitcoin index bot setup is an excellent analogy of a trader's life. If your trading plan is I trade bots, well, this thing's just sitting there. I mean, you don't know how the market's going to play out. Nobody does. In this situation, if the bot works, you get paid $3. If it doesn't, you lose $1. That's the whole sort of premise, the secret, the process. Make sure you get paid more when you're right than when you're wrong. And you just got to take your setups. So very much like this thing, as the setup was entered, you can see, oh, fuck me. Then the market works back up. We never did hit the stop. And now you're like, well, okay, well, now I get to move my stop to scratch. You can see. According to the setup now, technically I shouldn't lose money on this trade. But it's a trader's life. And really what you got to do is you got to just start to identify what kind of setups work for you individually. Then you just got to get in there and trade them. And I think I've told everybody in the public this before. Finding and building the setups, that's the easy part of trading. I mean, whether you're, range trader, trend continuation trader, a trend follower, whatever you want to call it, that's the easy part. The hard part of this whole game is actually implementing the plan and actually taking the trades when the plan actually says that you have to act. If you can get to that point and you can do that without reservation, then you are a professional and you probably don't need to be watching my channel anymore. If you need help, that's exactly why Jojo asked me to do this. Is that I got 30 years experience helping people get over that hurdle of, as Stuart said, you come to TRI, fragile, easily breakable. The goal here is to have you leave TRI anti-fragile. Not only does the 1% try to break you and you laugh at them, but you actually take advantage of them. So good luck. Follow your trading plans. PMA for the win. It's going to be a trying year here. There's no doubt about it. And while I don't really like doing this, I'd much rather just sit here and trade setups on my own. I believe, and I know it sounds crazy, but I believe I was asked to help. I think I am helping. It's a relatively small audience, but I think we are making a positive difference in this world. And if I can help you, that's the whole reason why I'm doing this. So hang in there, everybody. All the best. I have to go head off and teach a class now. We're going to have some fun. What are we going to do today? Today we are talking about sector rotation. Ooh, first 2 week study. And it turns out the first 2 weeks of the quarter, the money managers knew exactly this was going to happen. So we're going to have some fun dissecting the first 2 weeks report and getting students up to speed on sector rotation modeling. All right, everybody, have yourselves a great day. All the best, and bye for now.